In this presentation, we will write checks for normal expenses and business purchases within QuickBooks Pro 2019. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in the home page. We currently have the open windows open. You can open the open windows by going to the View tab drop-down and the Open Windows list. We're going to enter some checks into our system. There's a couple different ways that we can do this. One way, and the fastest way, if you're not printing the checks, or even if you're printing the checks, would be just to go through the check register. And that would be the typical way I would enter data if we're just entering the checks into the system, especially if we're writing the checks outside of the system or pulling this information from a bank statement, because that'll be the fastest way to go. The other way to do it is to go to the Write Checks item. So we've seen the register before. I'm going to show the register, and then we're actually going to use the forms so we can see what the Write Checks forms look like. And so we're going to go up top first and just look at the register. Go to the banking. We're going to go to Use Register. Now, remember that the default will usually be the checking account, but if you're in some other area like accounts receivable or something, it might default to the accounts receivable. So we want to make sure, of course, we're on the check register. All the balance sheet accounts will have a register. QuickBooks attempt to make things a little bit easier by having a register, so we don't. It'll lessen the amount of times we need to know debits and credits and no journal entries for us to have kind of a register up and down kind of system. Doesn't really eliminate it, but there it is. So we've got the checking account. We're going to say OK. And you can see this is going to be where we can just enter our data nice and easily, nice and quickly. So we'll have our date here. We'll have who we're paying. It's going to be a payment versus a deposit if we're talking about a check. And then the other account, typically an expense account, but it could be other accounts such as an asset type account. And then a memo screen. Also note that if you wanted to, you can have the split screen here. And what that'll do is it'll allow you, if you're recording an entry that has multiple expense accounts to go to, such as if you're recording a payment for a loan and you have interest and you have the principal going down, then you can hit this and you can have more than one expense account. Note the default is just to have one expense account because that's usually the norm. QuickBooks doesn't want to confuse us, so it'll just have the norm of one account there. So we'll take a look at a transaction that has more than one account affected, more than, well, two accounts or more than one account other than the checking account affected in future presentations. Also note that if this is selected here, this one line item, it'll condense to one line item here. And so that's just an attempt to make it a little bit more straightforward, easy to see. It's easier to go through and see what is happening in this format. I tend to like to see it in the two-line format. So this is going to be this. We'll jump back and forth from the check register as we go through. And again, we could enter it directly here, but we're going to go back to the home page, keep that check register open in the open windows. And we're going to write these checks using the Write Checks icon here. So we're going to go to the Write Checks. This is actually the form that QuickBooks will use whether we enter it into the register or not. This looks like a check, of course, and we're just going to be writing the checks in this format. Notice how all this information is basically in the check register and can be input directly into the register if we so choose. So we've first got the checking account. That's what we want. That's going to be the checking account. That's usually the default. Our only bank account right now, if we had more than one bank account, we would have more than one account there as an option. The number should pop up automatically. Now, if we print these checks, we would probably have this item selected as print later. And when you do that, watch what happens to this check number. It's going to go to print. And what that means is if you want to buy checks from the bank that will be QuickBooks compatible, then they'll still have the check number on them. You'll have to buy the pre-printed checks, then you put them in the computer, into the printer, and then when you print it, it'll print, and we will assign the check number in QuickBooks that should be the same as the checks on the check number. And that's going to be one of the major internal controls that even small companies can have over cash. So then we've got the date here. So we're just going to assign the check number here. And obviously if we're writing the checks, then we want to make sure that if we're handwriting the checks and then putting this into the system to get the information into the system, either from the bank statement or while we write the checks, which would be preferred, then the check number here should match. It should line up automatically from QuickBooks and line up to the check that we are writing. Okay, and then we're going to have the date, 1/28, we'll keep that. And we're going to put this in, we're going to pay the insurance, and we're just going to make up an insurance company name. So we're going to say Safe Insurance Company. And so notice this hasn't been set up yet. So we're going to go ahead and say set it up. We could have add new, but this is a new vendor, and this is because it's the first month of operations. After it's the first month of operations, then of course this vendor will be set up. In the first month of operations, we're going to have to set up a lot more vendors. The second month, third month will be a lot easier to enter data because this information will already be in the system. So I'm going to say tab. It's going to say, do you want to set this up? Yes, we do. Do we want to have the total setup? No, just the quick setup. Why? Because really all I want is the name, because I don't really want to store all the other stuff for most vendors in our system. I don't really care. I just want the name in there. If it's a special vendor, such as our insurance company may be, it may be worth us going in here and setting up the full vendor information, address, phone number, contact information. If we're paying like the utility bill, we probably don't need too much. For our purposes here, we're going to say we would just want a quick add. Now it is going to be a vendor. That's who we're paying. We're paying someone, so we're going to say vendor. And there we have it. The amount we're going to put here is going to be $11,000 that we're going to put in the insurance. And that's going to be for a year's policy. So we're going to say that's a year's policy that we're paying for $11,000. It'll populate for us here. And then again, it has the name here, no address, because we didn't put that into the advanced fill, but we don't need that to write a check. And we might want to put some kind of memo, 12-month liability insurance. The memo is always good. More information is good on the memo. They're not required, of course, but any information that helps an audit trail is good. And when I say an audit trail, I don't mean an IRS audit trail. I mean our audit trail. If we want to go back and see what happened, then it's nice for us to have the memos there so we can go back and see what we did. Okay, so then we got the account right here. Now, there's probably a default from QuickBooks as we set up as insurance expense. We could put it to insurance expense, but that would be a bit distorting because it would expense this entire $11,000 in the first month of operations. And if we paid for an entire year, that wouldn't make January look good. It would be kind of unfair to January because it would probably make us have a loss in January, although we don't really have a loss because we paid 12 months of insurance in January. So if you're, in other words, if you're paying month to month on insurance, or it's not a significant amount in relation to your other numbers, it's immaterial, then you could just expense it. But if it is material and you're paying a year's worth of insurance in 1 month, it's proper. You're supposed to put it into an asset account, and then we will go through and expense it as we consume the insurance rather than when we pay for it. So that's what we'll do here. And if we go up, I'm going to look for an asset account called prepaid insurance. And there is no prepaid insurance account. So I'm going to set that up. I'm going to set up prepaid insurance. If you're working with a CPA firm or something like that, and we're doing bookkeeping and we're working with a CPA firm or an accounting firm, they might prefer putting it into something like prepaid insurance. And then at the end of the year, maybe make an adjustment on a periodic basis to do the tax returns or something like that. So we're going to say prepaid insurance. So prepaid insurance, hopefully that's spelled correctly. And I'm going to select tab, and we're going to set this up. And it's not going to be an expense account, that's the default. So we actually have to go down here to others, and it's going to be an other current asset account. So it's an other current asset account we're going to have because we're going to put it on the books as an asset because we haven't yet consumed it. And then as we consume it, we'll put it into the expenses on a periodic basis. So I'm going to say save and continue. So prepaid expense or prepaid insurance, which we call a prepaid expense. So it looks good here. That's all we need. We don't need a subcategory. We don't need any added description. We're not going to put an account number to it. Tax code we're going to keep here as well. No opening balance, save and close. So that's going to be what we have there. I'm just going to go ahead and save and close that amount. Now I'll just go and give a quick check as we enter these. If we go to the balance sheet and we go to reports, we go to the company and financial, and we're going to go down to the balance sheet. So balance sheet, we're going to change the dates by going to the customized report, and then we'll change the dates from 01/01/19 to 12/31/19. And then we'll say OK. And then there's our information. So the checking account should have gone down because we wrote a check. Double clicking that. There's the checking account going down. The other side is going to go to the prepaid insurance. If we double click on it, there's our check. The check is the form, of course, driving these transactions. Closing this, closing this. The other side isn't going to the expense, but to prepaid insurance, another asset here. Not affecting net income, even though we paid for insurance because we haven't consumed it yet. We're going to determine how much we consume periodically, monthly, most likely. So if we double click on that, here's our transaction on the other side. So I'm going to close this back out. Also note if we go to the checking account over here, then that's going to appear in our checking account as well, kind of like our register balance as we fill out our checkbook. So it's kind of like if we wrote a check, the checkbook's filled out automatically for us, which is nice. So then we're going to go back to the home page and write another check. We'll go back to the write checks icons in the home page, or icon in the home page. It's going to be from the checking account again. The number should populate automatically. It's going to be January 28th. We're writing all these checks as of the same time period. And this is going to be written to Staples, which is a store, supply store. And we don't have that in here. So what I could select add new, but I like to type it in here and just say Staples, because that helps me kind of verify too that it's not here. If I start typing it in there and if it was there and I didn't see it, then it'll start to autofill. And then it'll say, okay, tab, do you want to set it up? We're going to say yes. Do I need any detail like the address and the Staples phone number or anything? No, probably not. I mean, I don't think so. So I'm going to say quick add. It's going to be a vendor. We're buying stuff from them. So we're going to say, okay, 500 is the amount. And there's the address. We don't have it because we didn't put that in there. And we just bought office supplies. And again, the memo, you might want to be more specific. We might want to say we bought ink or we bought something, within the office supplies more specific than just office supplies. Now again, when considering office supplies, if we select the drop down, there's probably an office supplies expense here. And this is another area where we could put it into an expense, or we may put it into an asset and then expense it. A lot of book problems will put it into an asset first as kind of an introduction to inventory. So if we're buying something significant, like if we use a lot of ink, for a bookkeeping company, and we use a lot of ink, or if we're a medical company and we buy a lot of supplies for medical supplies or something like that, then we kind of want to track the supplies as we would with inventory, meaning we're not just going to expense it when we buy it, but put it on the books as an asset, and then count it at the end of each period and determine how much we have used, and then expense the amount that has been used. We're going to go through that model because it's kind of an introduction to inventory, and it's often it's the more proper way to do it. On the other hand, if you're buying supplies like small supplies like Staples or something like that, even if you buy a year's worth of Staples or a year's worth of paper clips, then it's not likely that that dollar amount is going to affect the decision making of the company, and therefore you're probably just going to expense it. So in other words, smaller companies that have just kind of office supplies type expenses are probably just going to expense it because that's the easier thing to do. Larger companies or companies that have larger supplies that they want to track and see if it's been stolen or track shrinkage more closely and things like that are going to want to put it on the books as an asset in a similar fashion as we would with inventory. Count that inventory periodically, possibly monthly, and then expense the amount that has been consumed based on that count on a monthly basis. So that's what we're going to do here because that's more proper. That's, the more a proper accrual method. So we're going to say office supplies, but it's going to be an asset account. So I'm going to say a space. I'm going to put a space next to it, and that'll separate it from office supplies, the expense, so that I can set up a new account. Now, the way I'm going to know the difference between the two is because this is an expense type account, and the one we're going to set up is going to be an other current asset type account. So I'm going to say tab. Oh, hold on a second. Yeah, it didn't ask us to create a new account, so let's try a different method here. I'm going to select the drop down. We're going to go all the way up top, and let's try the add new. So again, we want to call it basically office supplies, but I don't want to make it an expense account. So we're going to go here to the drop down and make it an other current asset account and say continue. And then we'll call it office supplies. And it's not going to have any subcategory, description, everything looks good there. So we're just going to say save and close. And this name already in use, so it wants another name. So let's see, office supplies, space. I'm going to put just a period next to it. So I'm going to put an office supplies and a period next to it. So again, we could call it office supplies current assets. We could call it the other office supplies, which may be more appropriate to call the other office supplies, change the name to office supplies expense. But I'm just going to differentiate the two with a period for now. So we're going to have an office supplies, the assets, where we're going to accumulate the office supplies, then have an adjusting entry to record the assets being expensed on a periodic basis. So let's try that, save and close. And so it will accept that. All right, so that's 500 here. That's what we want. We're going to say save and close and check this out. Let's go back to the balance sheet. And checking account should go down. So I'm going to double click on the checking account. And there's the 500 decreasing here. So if we double click on that, there's our check. Closing this back out. Closing this back out. The other side not going to an expense, but to this office supplies. Again, if that period is annoying us, we could rename the name as current asset, or we could change the office supplies on the income statement to office supplies expense. But in any case, we see it here as an asset. We're going to double click on it. This is what we want. So we're going to double click on that, and there it is. Double clicking on the office supplies. There's the check. Closing this back out. Closing this back out. Notice there's no effect on the income statement or profit and loss. There will be once we expense the office supplies, and we'll do that at the end of the time period with an adjusting entry. Next one, we're going to go back to the checking account. Or, I'm sorry, if we go to the checking account, we'll see the office supplies here. So again, it shows up in the checking account. Let's go back to the home page, which is where I was thinking before. And let's go to the write checks now. We're going to write another one. It's going to be a check. Check number. Notice it's populating automatically, which should align up with the checks on our printed checks. And then we're going to type out Edison. Now this is going to be the utilities bill we're paying, the electric bill. So we're going to say that we pay Edison the electric bill. So utilities. And I'm going to say this is going to be a new customer or a new vendor. So we're going to say tab. And we're going to do a quick setup. Again, I don't need to know Edison's address or anything typically. So I'm going to say quick add, and we're going to say vendor. And also note that it would be nice to have all that information. If you have all that information, you want to add all the vendor information every time. More detail is better typically, but what we need to write the check, of course, is just the name. So we're going to say it's a vendor, and we're going to say it's for 620. And Edison here. Now, memo, and again, you could write a memo. You don't need a, it's pretty self-explanatory, but yeah, more detail is often good. You may want to put the month of the utility, possibly, although it should be pretty apparent by the date we're making the payment. Okay, so then we're going to type in utilities, which should be here probably because it's in there as a default by the system when we set up the chart of accounts, given the type of industry we are in. So it's going to be in most chart of accounts that will be set up by QuickBooks, and most entries will have utilities. So if I type it in there, it'll pop up as well. It is an expense this time, because we pay the utilities expense closely to when we actually consume the utilities, and then therefore expense them at the same point in time. Now note, if you wanted more detail on things like utilities, you could. Like some companies might group things together or possibly break out utilities in terms of the electric utilities versus something like gas, maybe. Most companies would group together something like possibly gas and electric. Even if you wanted to group like the phone company in utilities, you could. Most companies at this time, I bet, would break out the phone company into a separate account. So just note, we could have more details, but this is kind of the standard given by, and we know that because these are the accounts given within QuickBooks. So if it's within that setting, we probably want to think about it and say, if that's what QuickBooks thinks, it should go into utilities and not be a separate electric account, then maybe I should follow that default, unless I think in my particular industry, I have a specific need for more detail. Possibly I have a lot of gas usage versus electric usage, and I want to track those two separately in two separate accounts. Then you might want to break these out, and that would be a justifiable thing to do, setting up an electric utilities versus a gas utilities possibly. Okay, so we're going to save and close. We're going to go to the balance sheet. Once again, checking account, double clicking the checking account. We can see that there's utilities going down by the $620. Here's the check. Closing this back out, closing this back out. The other side this time is on the income statement. Finally, we're doing something to the profit and loss. So we're going to say reports up top, company and financial, profit and loss. And we're going to go to let's say 01/01/19 to 12/12/31/19. And so utilities, there it is. So utilities went up, bringing net income down. If we double click on it, there's our utilities. Double clicking on that, there's our check. So I'm going to close this back out, close this back out. And if we go to the checking account, there too is our utilities within that format as well. If you want to go to the check from here, you can double click on this item here, the check. And there's the actual form driving the checking account. Okay, so let's do this one more time. We're going to close this back out. We're going to keep that open. I'll keep that open. We're going to go to the home page and write one more check here. Hopefully one more. And it's going to be, the check number is the same date. This is going to be the telephone company, which we're going to say is Verizon. So I'm going to type in Verizon. Again, it's not there. It would be if it was the second month of operations, because we would have already written a check to them. So note that the second month of operations is typically going to be a lot easier because a lot of the data will populate for us automatically. So that'll be easy. We don't have to set up new vendors all the time, typically. So I'm going to say tab. And this is also the case if you're working at a company that's already established. So if you're picking up the books from a bookkeeping system that's already set up, then you have the advantage of being able to copy the prior bookkeeping system, which is nice. Although it's also a disadvantage if you disagree with some of the methods of the prior bookkeeping system. But once things are set up, then the next month is going to be a lot easier than the first month of operations if it's set up well. So once again, we're going to set up with a quick add, and it's going to be a vendor. That's the default. It's correct this time. And we're going to say that it's 360 is the amount. And we're going to say it's going to the telephone. Now again, this should be there because it's going to be the default for pretty much any kind of industry if we pre-selected a trial balance with the system. So I'm just going to type it in there and QuickBooks is going to generate it. In other words, QuickBooks generated this account when we set up the company by us selecting the type of industry. So I'm going to save and close. We'll check out those financials. We'll go to the balance sheet, checking account, double click the checking account. There is the telephone, Verizon. The other side going to an expense, telephone expense. Double clicking on that, we see our check. Closing this back out, closing this back out. This is going to the profit and loss, as we would think for most checks we would write, which would be expenses, the other side. There we see our telephone expense appeared, and it's also an expense which brings down net income. We currently have a loss, and so we're going to say telephone expense. And there it is, double clicking on that, there's our check. Closing this back out, closing this back out, going to the checking account in the open windows, just to check one last time. There's the telephone expense that has been recorded in that format as well. If you want to see the form, once again, double click on the check, and that'll show you this item. Now there's going to be one last thing we want to do here, and I'm going to go to the balance sheet up top. And we're going to say that we put the office supplies into the supplies as a current asset. So if we scroll up to the current assets, there's the office supplies. Now, if we go to our bookkeeper or supervisor or we later decide after we enter this transaction, we say, hey, you know what, our supplies are fairly small compared to everything else. Maybe I do not want to put this on the books as an asset, but expense it at the point in time we purchase it. In other words, we don't want to track the supplies because it's not material to do so. We want to expense them at the time of purchase, this being what typically will be done for many small companies. So if we decide that like kind of after the fact, then how can we adjust the check? Could we adjust the check? And of course, the easiest way to do that is just to drill back down on it. We can go to the check here. We're going to now say, I don't want it to go to the asset account. We want it to go to the expense account. So I'm going to do that by double clicking on this item. We're going to double click on this item. And we could just change this expense account here to supplies the asset to supplies the expense. Now, again, this is something that you can do within QuickBooks. You cannot do in a lot of accounting software because the software will prohibit most data input from doing so. Why? Because it would be best to have an audit trail to say, hey, here's the mistake I made, or here's what we did first, and here's why, and here's our adjustment to basically adjust this by voiding it and making another check, or by doing some type of journal entry to make this adjustment. But in QuickBooks, again, if you're within the same month of time period, then you may want, the easiest thing to do, of course, is to go in there and just change the account. So I'll show you how to basically do that here. We're going to go in and change this account, and that, of course, will adjust the financial statements. Be very, very careful if you do this kind of thing in a prior time period, because note what we're going to do is adjust the income statement, the temporary accounts. And if we did that for a prior month, which had already been closed and reported, then we're going to change those prior numbers, which are going to change retained earnings. So this is going to be adjustment that you can have in QuickBooks. I'm going to show you how to do it. Be very careful of doing this in a prior month. And if you don't want to do this and you want to leave the audit trail, then of course you could have the option of voiding a check or entering a journal entry in order to reverse the transaction. So we're going to go through here and say, okay, I don't want it in office supplies, the asset account. We're going to go down here and put it into the office supplies expense. So here's office supplies expense. That's the one we want. So then I'm going to say save and close. Do you want to record this? We're going to say yes. Now the other thing we might want to clean up here is if we go to the lists then and go to the chart of accounts, we then have this supplies that has 0 in it, which we don't plan on using anytime soon. So we could get rid of that account, and we could do so either deleting it or making it inactive. So if I don't want this in our chart of accounts, we could go and right click and say that we want to go to edit this account, and we could make it inactive, and that'll basically make it so it's not going to show up there, but it's still around. So we could unactivate it, right? And so if we did that, so I'm going to cancel that. That's one option. And then if we wanted to view the inactive items here, we could then do so and see if we wanted to make that item active in the future. Again, you want to be very careful to do anything to an account that has something in it, because that could cause problems. This account has no adjustments to it. The other thing you could do is, of course, delete it. Right click and delete the account. So QuickBooks may not even let you do this if there's prior transactions to it. So even if this is a 0 balance, you want to be very sure if there's no activity in it, then you could delete it and shouldn't have any problems. If there are any activity, even if that activity is in the past, you probably don't want to delete it, but if you don't want to see it anymore, make inactive. I'm going to go ahead and delete here and say, yeah, we want to delete that. And then that account should not be something that will confuse us as we enter data into the future. For more accounting information and accounting courses, visit our website at accountinginstruction.info.